Hello, everyone. Joshua Hayes at BigWaveTrading.com. I hope you had a great week and I hope you have a great weekend. Pretty amazing overall. The SPY, we're looking good. And I posted the chart in the chat room and I'm going to post it on the watch list page. But if you look at our seasonal SPX chart going back to 1928, 1122 marks a seasonal bottom for an end of the year rally, and it's basically a straight shot higher minus a dip in the middle of December. And seasonally, since 1928, it's basically all up from here. And I tell you what, besides a one binary event in December, which is FOMC, where the Fed is expected to cut rates by 25 basis points, and I put that at 100% chances. I don't think they won't cut or they'll do more than 25. So to me, there are no more binary events into the end of the year, and it's full steam ahead. SPY looks good, but the RSP, new highs, new all-time highs. I can't find any faults in that. QQQ. And actually, we were kind of on oh oh no, we might roll over this whole post-election move higher, but we found support right at that gap zone, and we've bounced higher, and everything looks good. And the best index is the IWM. That came very close to being very problematic, but we bounced right off that breakout downtrend line and straight higher. Of course, we still have the extremeness in the market, 4 days down, 4 days straight up. But overall, we're looking good. And look at this relative strength line. Listen, it's not going from the lower left to the upper right, but what it's done since July, I'm liking a lot. And there are a lot of small cap, mid caps out there. And I would like to start focusing on those more. But for now, the big caps and mega caps are still our leaders. And on that note, long term portfolios, I have two of them. One has been 100% invested since the beginning of 2024, the end of 2023. I had to start going in and working in the other one. And because I take profits from the swing and position portfolio, move it into the second long term portfolio, that always is going to have some cash available. But I'm under 20% cash in that second long term portfolio. And that's just because nothing is telling me to sell. Everything is working. So the long term portfolios are absolutely rocking. And that's despite having AVGO and NVIDIA as my two largest positions, not hitting new highs recently in this rally. So they are rocking. On top of that, we reconstituted the quarterly portfolio on Tuesday. That's 100% invested. And the last quarter for the quarterly portfolio, the S&P 500 was up 5.5%. The quarterly portfolio was up 21%, and almost 4x return to the S&P 500. So that's rocking. And in my position swing accounts, I'm basically 200% long on margin. I'm having a very difficult time raising cash, and how I'm keeping cash available for the next round of long positions is stocks gap up ahead of me. So ALAB, you can see when we initially went long in ALAB, we're up 95% in it. I got a really good add signal on this day, got a gap up. Can't add to it. Nothing I can do. Deckers yesterday, already long Deckers, got a great add signal yesterday on a cup with handle breakout, gapped up on me. Couldn't add to it. However, on Deckers, you can see we're up 13%. So that available capital is available for the new long positions. And I do have three, and I'm going to review all three. And if I get long all three equally weighted with the cash raised or the cash on hand in the swing position account, if they all trigger and fill on Monday, 200% long. So fully invested on the long-term portfolio, fully invested in the quarterly portfolio, maxed out on margin in the position swing account. There's just nothing I can find to talk bad about this market. I do wish we could have one thing going in my favor. I finally had a speculative long trade make a 1,000% gain. It's been, this used to be normal before, I would say, 2005, 2006-ish. It still happened before 2008 with my speculative trade setups, but this one still wasn't perfect. There's red bars in this chart setup, so I could not load the boat. But you give me a reverse split, no red bars, this kind of signal, it's a load the boat opportunity, especially when it's near the lows. But even then, I would prefer to see this setup from a longer base. That being said, the trigger was 445. We got long at 446, trimming and trailing on the way up. Now, the whole position isn't up 1,000% because you better believe after every big up day, I'm taking some profits and I'm trimming that trailing profit stop up. And right now, my final profit stop is below this low. So I've got stops trailing up the entire way, and I'll be taking more off at the market. But as you can see from the signal day, that's a 1,000% gain. I'm hoping there's going to be a ton more of these coming up. But a 1,000% gain in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. I could get used to that again. When I was a young man, it wasn't normal, but it happened a lot more than it happens now. But it's very nice to see. So overall, everything's working out. And on the end of day side, I only have one 100% sell signal today. I've already removed it from the system. THC was a new long this day. Today, on an end of day basis, it's a full 100% sell signal, rounding up 12% loss. Do you know what my total loss on the trade was? Right around 2%. And here's why. This was a long signal on THC to show you how I managed the position. Triggered and filled me the next day. I immediately stops, half my stop here, half my stop here. You could also use a 50 SMA too as a half stop, but I used the trigger in price is low a day as my first 50% stop. Well, it gapped down on me, and look at this wick low, 153.28. Look at this low day here, 154.40. So guess what? I was knocked completely out. The total loss on the trade, let's see if I can't get this more accurate for everyone. So from here, so basically the total loss on the trade was right around 4%, a little less than 4%. So keep that in mind. But if you didn't keep stops set tight, let's say you triggered in and got long, originally how this trade was supposed to be was 50% stop here, 100% here. So that's how, on an end of day basis, if you're not as tight as I am with stops, is how you would trade this trade. This is how it was set up on the trigger date. 50 stops, 100% of your stops. We're looking good. We pull down. You would have been shaking out at 50 here. You put another 50 here. But if you're on an end of day basis, you don't close below this low. So there's nothing to do. Now you're sitting pretty again, but on this day right here, that's not good. An attempted breakout, shooting star on heavier above average volume. No matter what, this is what I would do if I was trading on an end of day basis. A close below this low, I'm out of half. A close below this low, I'm all out. The very next day, now you're out of half. Now you have your final stop here. On this day, I think on this day, you're now all out. 151.84 is below 153.28. You're all out. But on an end of day basis, I went ahead and used this. So even though I will be listing it as a 12% loss, it was less than a 4% loss for me. And nobody using the way that we trade this methodology should have been long whenever it finally closed below this line right here. So that's the final line in the sand. So that was it for the sell signals. So now let's go over the long signals. I got two from my Cancelim scan. TOL, Toll Brothers. This is a leader in the home building sector. I have a pocket pivot point signal right above an uptrending 50 SMA, right above an uptrending 21 EMA. It's a little extended from both, but not enough because it's still within this consolidation pattern. When it's extended from the consolidation pattern it's breaking out of and the 2150, I start thinking about reducing size. But in this tape, I already don't have enough capital, but here's what I would do. I wouldn't want to lose more than 1% of my total account capital on this position. And now that we're a full steam ahead bull market, I'm looking to get long above 157.60 and 158.07 calculating my size and risking to this low. In a weaker market, I may calculate my size from here and risk to this low. You could always calculate your size to here and give it room to work to this low. But to me, with as many signals as we're getting, with as many good looking charts out there, it either works immediately or I just want to get the hell out and move on to the next one. But Toll Brothers, pocket pivot point signal, heavier above average volume, and a slight uptick in BOP. All I need to do is just see BOP moving up and the relative strength line, lower left to upper right. We're good to go. So Toll Brothers is my first long idea. It's my favorite one from this list. Then TJX. I'm already long TJX. I took this long, triggered and filled half yesterday, and I got my full position today. But even with that, it's giving me an add signal. So once again, I got a double bottom with handle pattern. It is extended a little bit from the 50. It is extended a little bit from the 21, but it's just a little bit, and it's within the consolidation pattern, so I don't feel like I'm chasing. I'm going to split my orders in half again, get a long half above 121.47, and the final half, or I adjust the size depending on the dollar at risk, 121.72, and I'll be calculating my size and risking to this low. Once again, in a weak market, I may calculate my size from this low and use this as my final stop. In this market, it's here and here. Now, if those two trigger, I'm going to be basically maxed out, 200% long on margin, but I do have one more idea, and I got to take it because it's one of my favorite setups. Now, normally, my favorite setup is volume truncation, max green BOP at the bottom, which means it's up here at the 100, followed by another volume truncation, max green BOP day. But in these big mid caps, you're almost never, ever, ever going to see that. But DFH is being added to one of the S&P indices. I don't know which one it is. So that initial gap, it's already got earnings out of the way. Now you got the volume truncation, surge in BOP. But today, inside liquidity trap, hammer candle holding the lows, taking out the opening price range on heavier above average volume with max green BOP. This is a double volume truncation and now a max green BOP play. And this one's very simple for me. 31.60. So it's not going to be half and half, but it would be like 55% of the order above 31.65. 45% of the order above the high of the day, 31.96. So if it gaps down, it'll trigger up. If it gaps in between and maybe then fails, I only have half this position on. But 31.66, 31.97, I'll have my full position. And with DFH, it doesn't matter, this one. But my final stop is going to probably be this low, and that's where I'll be calculating my size from. But I'm not going to be using, if I had to go, is this a stock where I would put all of my capital or push it, calculating my size and risking to this low? Absolutely not. DFH is not bona fide full canceling quality, so I can't do it. But maybe you calculate your size from a gap fill and risk to this low, or maybe you calculate your size and risk with an entire gap fill. But for me, I want to see DFH work immediately, and that's it. It keeps working like AGFY, or else I'll just go ahead and get out and save that capital for the next position. All right, everyone, we'll wrap it up there. Have a great rest of your weekend. I'll see you in the chat room on Monday.